Welcome, Delta Traders. This is Dr. Vance Cast. I want to talk to you today about the live tracking balls for 2015. The chart that we're going to look at is going to give us the performance of 2015 from January 1st up to August 7th. But first, we need to understand clearly what we're tracking. We're not tracking the Delta 123 trade with the trend. We're tracking just the balls with the trend. Okay? So the Delta 123 trade with the trend produces a 60-40 result with a risk-reward level of G4S3. Obviously, if we change the G or we change the S, it'll change that 60-40 to another number. Your results on any given trade are skewed by the way that you adjust your risk and reward levels. So the rules for taking the Delta 123 trade with the trend are as follows. You need the signal in the same direction as a trend. You must have a 30 to 50% retracement. You must not have a stop in the clouds, and you must have room for target profit. Now, these are the things that we discuss in the boot camp, and these are the things that we discuss every day as traders. What we're going to be looking at is the trade signal with the trend only. This is not, I repeat, not a Delta 123 trade. It produces only a 50-50 trade at the same risk-reward level as G4S3. Now we track this trade for a statistical baseline. And the reason we use this statistical baseline is because this is the baseline of the signal only. This is the signal only without the other Delta 123 trading rules. Now you'll produce more money oftentimes with just the signal only, but you'll have a higher drawdown because, as you know, you could lose more trades in a row. So you'll lose a lot more trades in a row if you're doing a 50-50 trade than if you're doing a 60-40 trade. Now let's look at the numbers. What you're concerned with the normal Delta 123 trade is that your winning ratio should be 5 to 10% higher than the winning ratios that we're showing here. You cannot compare your number of trades, just the win-loss ratios, because your number of trades will be more selective. And you can't compare the end point results because you don't know the selectivity. What you want to make sure is that in any given range or any given week that your win ratio, like I said, is 5 to 10 points higher than this particular baseline. Sometimes when you're trading, it's hard to keep things in perspective. Let's look at January. The first week in January, you would have a positive 9 points. The second week, a negative 1. The third week, a positive 34. And the fourth week, a positive 5. If you look at the winning percentages, it looks like you're not winning very much. 54.5, 42.4, 57.6, and 45.8. But if you add those up and divide by 4, you come up with almost exactly a 50-50 ratio. In fact, it's a 50.075 to 49.25 ratio, which, like I said, is basically 50-50. And then when you factor in the 5th week of July, you come up with about a 52.5% win ratio. Now, as you can see by the individual weeks, February didn't fare too well. In fact, February ended up with an average win ratio of just 43.53% wins, which was only about 4 points. March picked back up again and gave you about 77 points, which was about a 52.68 win ratio. Now, the reason for demonstrating each week individually like this is to show you that within the week, you can have winning weeks or losing weeks. You can have weeks where you break even, but in the end, when you add all the weeks together, you should be right at about a 50% ratio with most months. Now, let's go ahead and take a look at the monthly chart and get away from all of this detail. Here's the monthly chart. And as defined in the weekly chart, you see that January produced a 52.63 result, February a 43% result, March a 52%, April a 56%, May a 45%, June a 51%, July a 60%, and then August, which is only the first week of August, was right at about a 50% ratio. Overall, if you calculate each one of the months, that's a 52.07% winning ratio for a net points of 483. Now, 483 net points in the first 7 complete months of the year, and the first week of the 8th month is pretty good. That's between 483% on your money and 960% on your money, depending on whether you're trading 1 or 2% of your portfolio. So that's pretty darn good for the beginning of the year. And we accomplished this through just by looking at the balls with the trend. Now these numbers here are independently verified by Brian, and several other people, since these have been published, have independently verified these numbers. So all it takes is to utilize instant charts to verify the results. So all of the traders of Delta Trading Group should easily be able to verify and duplicate the results very closely. Now this is accomplished without doing a lot of trades. In January we had an average of 6.3 trades a day, but often you only have 4 or 5 trades a day. Again, like I say in every day of trading, it's not about winning the trade. It's not about winning each individual trade. It is about making money. And to make money, you have to set your risk-reward ratios so that they are appropriate for the particular trade that you're doing. In this case, it's a all balls with the trend, which is only a 50-50 trade at a G4S3. Normally, you'd be doing a Delta 123 trade, which is a 60-40 trade at a G4S3. Now, if you wanted to increase the number of trades that you win here at the 50-50 trade, you know that you would either have to increase your risk or decrease the amount of profit you're going for. But why would you want to do that? Why would you want to try to win more trades when your net result is 483 points over the course of 7 months? I, for the life of me, can't understand why people want to increase the number of trades that they're winning when their profit margins are so high at a fixed number of trades, at a fixed win-loss ratio. Over the course of 749 trades, the win-loss ratios are exactly 52% here, which this trade we know is a 50-50 trade, plus or minus a few points. So why would you want to mess with your risk-reward ratio? Because that directly affects your win-loss ratio, and at a win-loss ratio of 50-50, you're so profitable. Likewise, when you're doing a Delta 123 trade, it's important to realize that if you mess with your risk-reward ratio, you're going to eschew the 60-40 results. If you're not losing 40% of your trades, then you're not winning around 60% of your trades, and you're not as profitable as you should be. So again, week after week, month after month, year after year, the Delta 123 trade produces a 60-40 result at a risk-reward ratio of G4S3, and the balls with the trend produce a result of 50-50 at a G4S3. And they're very profitable. Don't mess with them. Learn the baseline trade first before you ever try anything, and you'll never want to abandon your original Delta 123 trades. Again, this is Dr. Vance with Delta Trading. I'd like to thank Brian for accumulating the results and distributing them to the members, and I'd like to thank all the members who independently verify the results as we go along. Happy trading.